did you make of the what a marketing campaign by Apple? They do this every year, don't they?
Yeah, and you know, that's great. But the bottom line is all these new devices or upgraded devices are not financially material. I mean, this isn't, the story is the iPhone. It has been the iPhone in the last few years. It's continuing to be the iPhone. It's 70% of the profits. It's 55% of the revenues. It's about the iPhone. So all these other things can fill in a gap here or there, maybe help the multiple here or there, but it's about the iPhone. And so this is a company that was, had a tremendous growth, as you know. You now have a market cap of almost $700 billion, $250 billion of revenues, $200 billion in cash. Tremendous growth, but it's entering a more mature stage of its life cycle.
You nailed the use of cash call before Carl Icahn and all that. Is Apple Computer now a blue chip stock, or is it a growth stock masquerading as a blue chip stock?
I think it's more in the mature blue chip category where the performance of the stock is going to be dependent on, yeah, we're going to get a little bit of growth, but it's going to be, mid-single-digit revenue growth is the expectation. So a little bit of growth, but the dividend and the share buybacks are going to be important components of the total return. The days of tremendous wealth creation for this stock, I'm afraid, are probably over. But I like this stock. I own this stock. I think it's going to be a very reasonably good performer over a period of years, but it's not the Apple of a few years ago.
Exactly. And as an Apple customer, and I am, it strikes me that when the iPhone 6 came out, I traded in my iPhone 5 to get the iPhone 6. The announcement that we had this week didn't drive me into an Apple store right away to say I've got to cash in my 6 to get the new upgraded, longer battery life, better camera. At some point, they must feel pressure about bringing a new product to market.
Yeah, and again, the new product issue is nothing can be big enough. Let me put this in perspective, because they talk about we want to get into the new content business. We want to be sort of like Netflix. They could buy Disney, all right, with their cash, but Disney's revenues are about 1/5 of Apple's. Netflix's revenues are 2.5% of Apple. So how do you move the needle with Apple? It all comes back to the iPhone. That has to be a successful, continued story.
As John Templeton was saying, I said this earlier, shares are on sale. When Howard Ward wakes up today, or for that matter, recalibrates for Monday morning, is this a correction in a great bull market, or is it a more cautious Howard Ward this morning?
Well, look, Tom, a lot of risk has been taken off. Expectations have come down. Risk has been taken off. I think this is an ongoing correction in a continuing bull market, 2% rates, 3% growth, expectations of around 8% operating earnings growth next year. That's what I would focus on, 15 times earnings. Frankly, you got to like stocks here.
Okay, very quickly, Ken Rogoff with us with Harvard. To the globalization that is Apple or General Electric, whichever, should Americans fear a new globalization, or are we managing globalization right now to keep America robust? Which way is it?
Gosh, that's a complex question.
You got 42 seconds.
Yeah, I mean, the U.S. has been a huge winner from globalization on the consumption side. Our standard of living, I think, has risen much more than we effectively measure it. And when people say the middle class is no better off than 25 years ago, I think that's just a wrong read of the numbers. It's much better off. But obviously, it's very disruptive that it's happening very fast on the job front, on income distribution.
Because the numbers don't measure all the various benefits we get from technology and globalization.
No, absolutely not. There are things like social networking, which you can be sarcastic about, but people find a great benefit. So I think our standard of living has risen a lot.
Ken Rogoff and Howard Ward with us.